Hello friends, today we are going to solve a major problem in future trading of cryptocurrency. The problem is many traders or many of my students do not understand how to set the stop loss percentage, how to set the leverage and how much should be the call margin. This is the major problem because if you see some telegram channels there, the people who give the calls, sometimes they give set your SL to 10%, 12%, 15%, which is absolutely weird. But in that case, the people are confused that if I put the 10% SL and leverage is 3, then my 30% risk is there. But some people say you should not take more than 2% risk. In this video, we will see how to solve this problem, and along with that, I will give you one ready Reckner's Excel file which you can download from the link in the description of this video, and you can use this Excel file and decide the leverage, the SL for each and every your future call. Before going ahead, this is our disclaimer. Hello friends, welcome back, and we will see the problem again. The problem is, while doing the future trade, many of my students or subscribers are in problem. The problem, how to set the SL percentage, what leverage shall be used, and what should be the margin of the call. That means if I have the $1,000, what should be the margin for this call? Shall I take this call of $100, $200, $300, and so on? Number one, I always give warning to my students and subscribers that you should never ever take more than $200 from your pocket for the future trade. If you want to go for the higher calls, higher margin call, higher size calls, then earn from the future trades, compound it and use it. But from your pocket, even though you have the crores of rupees, you should not go for more than 200 rupees $200 initially for the future trade. Okay, the rest of your capital should go into the spot trading. Okay, now I have given you a Excel file. The link of the Excel file is given in the description. Now let us see the Excel file. Actually, when you are doing the future trading, there are two types of trade. Number one, you are compounding it. Compounding means every time you have to use the 100% of your capital, theoretically. Technically, we use around 99% or 98%. Okay, because the price slipping is there, market slipping is there, slippage is there. So, we use 98 to 99%. But here, we will consider it is 100%. So, in the first type of calls, you will use 100% margin, means whatever your capital is, 100% capital you are going to use for that particular call. Whenever, suppose that call is in profit, and now suppose your initial capital was 200, now it is 240, the next call should be of 100% capital, that is $240. Again you are in profit, now your capital is 300, so next call is of $300. So when you want to go in this way, compounding way, then how you should fix the leverage and SL, that we'll see. The second option is you are not going to use the 100% capital. Instead, what you are going to do, you are going to book the profit, and whatever profit is there, you will at the end of the day, you will transfer to spot exchange. So you are booking the profit, and every time you are working with only $200 or $100, whatever your initial capital is. Okay, let us see the file. Now we will take the first case, that is we are going to use the 100% our capital. First of all, you can change your leverage here. Suppose my leverage is 10, let us say, and my capital is, say it is 500, and my risk, total risk on the capital is suppose 10%, and so that out of $500 I can bear if I lose $50. Okay, That is my risk capacity. I can lose $50. If you want to take more risk, you can go for 15%. Like even if the $75 goes, it's fine. Now your risk is 15% every time. So what you should do? First you mark this row of 15. 15% row you have marked, and this is the call capital. That means the 100% of the total capital you are using. That is, your margin is $500. That is 100% you are using. Whenever you are marking this row, mind well, you cannot use the stop loss more than 1.5% at leverage 10. So now 1.5% stop loss is a very less stop loss. This stop loss in cryptocurrency, depend on the coin, can be hit very easily. So according to me, suppose I want the stop loss to be 4% stop loss, higher stop loss, what will happen? My risk becomes 40%, and hence I should not use 100% capital. I should use only 37.5% capital of my total capital. That means only $187. 37% of $500 is $187. So for this call, I should use only $187. Maximum $187 I should use for this call if I want my leverage 10 and SL4. Now another case is $187. I feel it is very less. I want some more margin because the call is sure shot and I want more profit. So what shall I do? In that case, I should, if margin I want more, I should reduce the leverage. Now in this case, for the 15%, I cannot use more than 3. Initially it was 1.5, now it is 3%. But suppose I want stop loss of 10. In that case, I should use only 30% of my capital, that is $150. Or suppose I want more of the margin, so minimum or the maximum margin I can use is 15%, that is this. This is the minimum level now has come to. The minimum level is 500% with the double of the SL, because I have made the leverage half. Okay. Second case. In the second case, suppose I want to use leverage 10 and my total risk is again suppose 20%. I can take a risk of 100%, but I am very sure the coin, I am using a meme coin now. I am taking meme coin where I want, suppose here 5 leverage is there, where I want 10 as a SL. Now here in second type, first of all fix your SL. How much SL you want? You want SL 10. In that case you are taking 50% risk. That means you should not take 100% margin of your total capital. So how much you should take? Only 40% of your total capital, that is $200. That means if the $200 is margin, leverage is 5 and SL is 10, and if this SL is hit, then only $100 will go. That is 50%. That is $100 means 50% of $200. Okay. So accordingly, whatever SL you want, in that case, suppose you want SL 5. Suppose you want SL 5 and now look, wait, let us check that if we want SL 2, 2 SL is enough, for example. Now here it is giving you $1,000, but your risk is 20. So what I can do here? I can increase the leverage. I can go for 8. So now if I want this is 2.5 SL, I can take the more of the capital by increasing the leverage. Okay. So accordingly you have to work. Always remember, you should not take any risk more than this. So I hope that you have understood this table and this Excel file. I have given this Excel file to download in the description of this video. So you can download a file and use for your future trade to set your leverage, your SL percentage and your risk. And so you can manage the risk. Remember, you cannot compromise with the risk management. You cannot take the leverage and SL as per your own mind. Okay, you cannot do this randomly. There has to be some rules and regulations, and beyond that you should not step out, because I told you that there is a very less margin between the future trade and gambling. So if you take any SL, any leverage, any margin by your own mind randomly, then you are stepping into the gambling zone, and then your capital will be at risk. So I hope you understood this. If you have any other problems, please write down in the comments. I will definitely try to solve your problems. And in the description we are given our premium channel links, our courses links. If you want to earn the steady and regular income in cryptocurrency, you must do the courses. Don't step in the cryptocurrency field blindly. Thank you very much. We will meet in my next video. Till then, have a nice time. Goodbye.